Kunal, coming to you first. Technically, what's the chart on the Nifty looking like today? One day of good positive US futures action and our market seems to be in a much better mood. How are you reading into things and what are your calls for today?
Good morning, Varun. I think, the last 3 months and the patterns for the last 3 months clearly define one very important trend, that the corrections have lasted for, just a couple of days, and the trends, the uptrends have, have lasted for a longer duration of time. Now, these are classical signals which you look at when you try and, go through those traditional, technical analysis of the indices. We look at indicators, we look at price patterns, but we give more emphasis, towards what's happening to the prices because that's where the market generally takes cues and directions from. So I think in that regards, I would be of the belief that we are into a strong uptrend. The global markets are very supportive. So you have 1 or 2 days of odd consolidation which happens in the Asian markets or in the US markets, but then there is a very strong comeback into these indices, and that also helps and gives a fillip to our markets. The best part about our market also so far has been the composition of market internals. So you have so many large caps which tends to participate at every new fresh trend on the upside. So like for example, last 3 months you didn't have Reliance participating. ITC was more or less like a market mover, but now you have Reliance which is moving up higher. UPL which has now shown signs of potential breakout. ITC has also been a new contender on in terms of breakout as well. So in overall, I believe that these are classical signals of bullish market signals. Now I would suggest two buy calls at current levels. The first one is a buy on Bajaj Auto. I for one believe that the stock is heading towards a breakout on the short term as well as on the medium term charts, forming a bullish flag pattern on the hourly time frame. And the second would be a buy on Bajaj Finance. Now this is a more of a contra buy. The stock has been down from 5,300 to 4,800ish kind of levels, but I think at current levels it's completed a bullish divergence on indicators. Prices have hit back to some key moving average support as well. So I believe after a couple of days of sideways price action, the stock should pick up pace yet again. So this is a high risk trade, a contra buy on Bajaj Finance, expecting that the 4,700 bottom with the stock had tested a couple of days back. That should be a short term bottom in place for the stock and should head back towards hitting its previous high of 5,300 levels. So buy on Bajaj Finance, targets of 5,300, stop loss 4,650.
Okay, thanks for that, Kunal. Quite an interesting selection of stocks. Hi, Rajesh. Good morning. What about you? High risk and low risk calls for our viewers?
Good morning. As far as calls for medium risk goes, I would go for two medium risk calls depending on the market condition because although they are fundamentally very strong, but as we move towards the budget space and the quarterly number space, things are going to be volatile. But still, I would recommend these two stocks for medium to long term. First one would be Grasim. If you look at the company, both the division BSF and Caustics are doing very well. The volumes are almost on the pre-COVID levels. There is a strong BSF demand from China as well, and the fertilizer space is also doing well. We are not to forget this company has the subsidiary of these companies, Ultratech and ABCL, both are doing very well. It has a holding of around 11%. In Vodafone, and we have seen Vodafone doing well on the bourses. So again, the valuations are going to be added to these numbers, and capacity addition BSF is also going to add. Valuations at around 20-22 times earnings are quite reasonable, and we believe for a medium term one can buy with a target of 1150 rupees. The other one would be from the chemical space. This is the Balaji Amines. We have seen robust demand from the divisions they cater, the pharma and agro industry they cater. 77% of the revenue comes from these two industries. They have ramped up their production, and the PLI scheme is going to help. Margins are on a higher side. The numbers in the second quarter have been quite good, and we believe that even in the third quarter, the performance would be repeated. And not to forget the kind of scenario from China, which has helped the chemical industries to grow well. We believe that this stock can be bought with a target of medium-term target of 1,300 rupees. So we have a buy call in these two stocks.